Hello and welcome to my next War and Markets review. Well, after yesterday's boom rally of 4% across the broader market, today was a much cooling off day. The Nifty was down 1%, mid cap was flat with about 32 basis points, and small cap and micro cap were also at the margin. So, clearly a cooling off day. And what is the reason for this? Well, obviously, it was the fact that as the market opened, it became clear that Israel launched a massive attack on Lebanon, killed almost 300 people, and they struck a whole lot of sites in just 10 minutes. So clearly, Israel's position on the ceasefire became clear that they are not going to stop their war against the Hezbollah in Lebanon. That led to a lot of nervousness in the market. So as a result, oil again spiked in the middle of the day to 98, and that led to, is the ceasefire going to sustain and turn to an end of the war or not? So FIS and DIS both, however, today showed a remarkable drop in terms of their selling or buying, as the case may be. FIS sold only 1,700 crores today, and DIS bought even less, around 985 crores. So clearly, this cash market action doesn't explain this, but two things to draw from this. So obviously, I was looking at the gross and the net numbers of the FI sales. So from April 1, as I mentioned yesterday, they have been selling about 7 to 9,000 crores a day. But yesterday they sold about 4,000 odd crores. Today it's down to 1,700. But if you look at the gross purchases numbers, right from April 1 to now, I observed that is gradually increasing. And today, of this 1,700 crores, there was almost 15,000 crores of buy by FII and about 17,000 crore of sell. So the gap between buying and selling is coming down, which means slowly the buying is going up, and the selling is coming down. So, but it's also obvious that the total volumes that they're doing are much less. So, what are the reasons? I'll dwell into that. But the same with the DIIs. See, yesterday they bought about 4,800 crores, if I remember. Today it's down to less than 1,000 crores. What explains this? Well, again, we've been speaking about this, that the huge amount of purchases they made in the month of March means that they are running out of free cash to that extent. Plus, now with the earnings season on, both the FIs and DIs would like to wait and watch the earnings season. The reason for that is, if you look at a trailing PE valuations, right, even against international, India's long-term premium was 64% against emerging market. It's down to about the 50%, 52, 55% levels. But in the domestic market also, against the long term, Nifty is trading at about close to 10-year average. But both the FIs and DIs are interested in the forward premium market, and until the earnings season plays out, you would not be able to calculate what is the forward P ratio of the market to compare either with emerging markets for FIIs or with long-term averages for DIs. So one of the reasons that they are slowing down is wait for the earnings season, judge the impact of the oil. See the impact on the oil on the current quarter's earnings. They might have calculated and already discounted. They would have brought down the consensus. But what they would be keen to understand is to what is the projection for the next year, the guidance, so to speak. So I think the sharp drop in the total FI and DI volumes indicates that the earnings season is what now they're waiting for to judge the Indian EPS growth for next year and then take a call. Similarly, on the front, if you saw today, probably in the F&O market, there was a lot of action. I think the banks, which was the best performing sector yesterday, were the worst performing sector today. So I read somewhere that there's been a lot of long unwinding, right, from the F&O segment. I don't track the F&O segment so closely. I've just gone by the reports that I read, and it said that there seemed to have been long unwinding, right, which has caused this thing. So on the F&O segment, there is action. I think the put call ratio has changed. The long short, it's still in favor of shorts. If I remember right, it's about 22.78. So FIIs are still nervous around the Indian thing because of the ceasefire and its stages, right? So now, if you look forward to, let's say, tomorrow, and what is the thing? Well, post market hours, there has been some developments which are of interest. So what is it? So let me talk about the result first. The result is that when the market closed today, the GIFT Nifty was in the red. Right now, I see the GIFT Nifty is in the green. Most international stock markets are in the green, and oil, which went up to 98, has now come back to 95. What's happened? Well, two things have happened. One is that Trump has sent Mr. Vance for the talks on Saturday. So the talks are confirmed that is going to take place in Islamabad, and Iran also is, I think, sending a 10-member delegation. So at least there is some positive that they're going to sit and talk. Second, Trump appears to have told Israel that Lebanon attacks have to stop something. So I believe that latest news is that Mr. Netanyahu has told them to open a channel of talks. So as against this morning killing 300 people there, evening he has asked them to open a channel of talks. So there is some growing optimism that the talks would ultimately lead, and so the markets are in the green. So hopefully tomorrow should be a positive open for the markets, and that's a welcome trend. So as we now wait for the earnings season to unwind and the ceasefire news to play out, I would say that FIs and DIs gradually could start increasing, but substantial earnings have to come in. So for about a week, I really don't expect much change in the situation. It will continue to be a sideways market because neither strong selling nor there are no triggers for that, because oil at 95, 98, I think these levels have been discounted as far as the EPS is concerned. So I think that unless the ceasefire talks fail, in which case oil may start shooting up back to 110, 115, then the markets could be under pressure. Alternately, if the talks are looking like they're going to close out positively, oil could ease back to the low 90s or the late 80s levels, which means there'll be a lot more easing from an India perspective. Because bear in mind, the rupee maintained its strength today with the RBI action still in play at about 92.66, if I remember. But the 1 year forward premium, I was looking at it, it's still showing rupee at about 96, 97 kind of. And the NDF market, though Indian banks cannot participate, the NDF market exists, is also showing that roughly 97. So a depreciation. So today the pharma, the metals, and the IT was marginally positive, is indicative of the fact that there is a likely forward depreciation in play. So all of these factors then, now the two big events then are ceasefire and earnings season. Both of these things we have to keep tracking. So, but like I said, right now the world markets, including GIFT Nifty, are in the green, and that gives us some encouragement for a positive start tomorrow. And how it plays out, I'll come back to you tomorrow. Thank you. Good day.